Alright, Mr. Wood, gonna break down the first day of June, which is the first day of June. Copy that, 6-1. SPY S&P 500 ETF, long-term uptrend, recent trend action, coming off a 4-day sideways, breaking out to all-time highs. Obviously, it was one good trade in SPY today, so potential triggers are just getting above this level, trading above it on volume, just trading above the level, holding higher, kind of tightening up against the level and then breaking out. Could have bought a resistance to become support. Just a few different ways could have traded that. If we opened up, could have be down, test this level, then ABCD'd. So just a few different ways. But the line I had marked was the all-time high, as you can see. So we open up, kind of test down. So test down if we open up is good. Pop the level, and then test it again. So as we were tightening up right here, I think you could have bought in there. Say break the level, buy the first pullback. You could have bought in there. SPY was definitely one good trade today. So just a couple others. I had a few examples of what were good, like one good trade. Maybe just like really one. Just that being W. W is the one good trend trade from the day. So obviously this has been on my radar too. You pointed it out as well. I have fucking two lines right there. Just mark the exact all-time high. So W is in consumer cyclical sector. They do retail. So what's the setup? Is they're coming off this long sideways, potential breakaway gap on this high volume day, and we've just been going sideways. Lack of price rejection from the all-time high. Above 65.80, there's no resistance above there, and we've got all these overlapping days from the past like 13 days, not 13 trading days, but like the past like 10 trading days. So just kind of overlapping, going sideways. That potentially, once again, we said lack of price rejection, and also overlap sets out breakouts and I think potential wide range days. So couple that with getting above the all-time high with no resistance above, could set up a nice trend trade. So we have a couple levels. This kind of like 65 level, and then the all-time high at 65.80. So really the real level I think is this like 65 whole number. So you want to see it trade above there on volume, or intraday uptrend and hold into the level, or test the level, test up, hit it a couple times, ABCD into it, or like I said, just break it out on high volume and buy the first pullback. What ended up happening was we got our intraday uptrend, so higher high, higher low, higher high, higher low, and then we had this kind of like 65 level, that first one that I marked off, kind of tightening up into it. So maybe you could have bought here, knowing that was the top of the range, but if you say, technically speaking, that point is technically within the past 3 days range. So, you can't buy there according to my rules. So what would I do is we break out. So I'd buy the first pullback, which would have been right here. Probably risk back down below the level. So, maybe you have to resist, risk of, fewer shares. If you were really aggressive, but like I said, for my trading style, if you're really aggressive, you can just kind of risk, maybe just below this low. But for me, I know that the real trade is back below this level, so maybe I have to risk 50 cents. If I risk 50 cents, maybe you only got a 2-to-1, but it's a winning trade. A lot of good things going for this trade. My strategy is going to be covering by 3 p.m. because according to Bulls of Wall Street, that's when I have to close my positions out in order to receive like the P&L bonuses and waiving the daily like platform fees and all that shit. So profitable days, I'm probably going to be out by 3 if I'm still up at that time. So a couple of the good ones, that didn't resolve. I think the daily chart setups are there that didn't resolve in the way we wanted them to, but just keeping in mind. So when big picture trend is up, so higher highs, higher lows, higher highs, higher lows. Recent trend action, so it's consumer cyclical, obviously wins casino. Going sideways, kind of lack of price rejection at the all-time high. So once we get above 129.03, all those scenarios we talked about, kind of getting above the all-time high, we talk about breaking out in volume, or like an open up V down, maybe want to test this level. I didn't like when specifically, put me on guard because of a gap up. We didn't gap up, go up, but there was just a nice, prior resistance level off the open, and then prior resistance became support later in the day. So you bought right in here for 60 cents, and you ended up getting out right here. Maybe it's like a 2-to-1. I know it's not the risk reward, but maybe this is one of those where my a gap rule. So this is technically a naked gap up. So I'll probably pass on win, but just wanted to say like the bigger picture parts of it were stocking an uptrend at all-time highs. It didn't gap up more than 3%, which might be my litmus test for how I decide what a naked gap Keltner is, or just a naked gap. I mean, it's still open within the Keltner, but we say like it's kind of coming off like a month-long, high-level consolidation. So, taking the gap there might not be the worst thing. A couple of other things. Regeneron. So Regeneron's a biotech. It's a high beta stock. And not trending, just kind of like hanging out at the all-time high. So going sideways. Had a recent move up. Just kind of hanging out at the all-time highs, but we're still at 52-week highs. There's no resistance above. So you could say that, above, 460, 440, there's no resistance. But just by following my rules, I thought this was a really good trade, or no trade. This is the opening range high, and I thought I set that to orange forever. I guess not. No, it was this one. Yeah, anyway. So I set the opening range high right here. So I realized, okay, well, I'm not going to place a trade until we're, outside of the opening range high. So certainly we spike up right there. But, immediately find resistance, change of character, something very different. Like a lot of supply came in right here. So just, following my rules and saying, hey, I'm not trading within the opening range. I'm not going to trade a open up, go up, spike up. Kept me out of a losing trade here, even though, a lot of things in the daily chart were set up for me. Expedia was the same thing. Expedia is an online booking site, and, you book your flights and hotels and shit, and consumer cyclical, so big picture uptrend, higher highs, higher lows, recent transactions, just a few overlapping days, 3 inside days, just below the all-time high of 146. So, intraday, I just, Expedia is kind of notorious for this, like, spike up in the morning. So, having an idea of how stocks trade, so just another one of a, friendly daily chart. But I know, what was there, like 146.03 is my, I know where I had it there. So 146.03 is the all-time high, but 145, is this bar right here. So there's the opening range high, and it's like I'm not going to take a trade until we're Cove H above the opening range high. So yet again, friendly daily chart, breaking out to all-time highs, is just being above, as we talked about, is just being above the level enough? No, like I need to have more than just one thing in my corner. So Cove plus being above the opening range high plus not spiking up, not gapping up, plus an intraday uptrend, plus volume coming in on the open up, being above the opening range after 9:45 or 10 o'clock. That's a much better trade than I think W, right? So just another one where, hey, my rules kept me out of a bad trade. Let's see, Hume, kind of same deal here. Just, there's not really a massive daily chart setup. Hume is a healthcare sector, and they're, it's in the long-term uptrend, higher highs and higher lows. And just the trigger is just being like, okay, getting above, there's no resistance above 134.88. So it's my thought of like being above 134.88. Maybe we blast around volume. There's really no like compression or anything below here. Kind of, if anything, it's a little weakness after we broke out to the all-time highs before, closing way down, closing down. So, maybe not thinking that there is strength up here, seeing like a little bit of weakness in the background, but that doesn't mean you can't go long if we get above 134.88. So, anywho, one of those situations where yet again, we're above the opening range high, but this is one of those where, what did I write down? But so we broke above the level, right, the all-time high here, right, the 134.88. We immediately rejected back down, right? So we broke it and then just immediately traded back beneath it. So, that's not strength. So obviously that kept me on losers. Just reading the price action, you could have called this maybe a potential, intraday uptrend. The volume's kind of weak, to be fair. So I mean, you could have called this higher high, higher low, higher high, higher low, and kind of getting right, back to the all-time high. You could have called that a resistance become support, and maybe you bought in here and somewhere in here, and you risk, 80 cents. I mean, there's no reason why it couldn't go back up, but just kind of putting some pieces together, seeing, know that we've failed at the, right around that level before. We break out on kind of weak volume. And then immediately trade right back below the level. So I mean, it's 2 or 3 minutes. So no real window for resistance become support trade. Okay, we talked about that. Why? I know I'm bringing up a few things. Why? Just yet again looks like, I think, just another good example of. Or maybe a losing trade here, but it's okay because we're in a long. Actually, fuck long way. I didn't really bounce out to the bigger, so immediately I zoomed out and was okay. Fuck, we're not really in a long-term uptrend. I was just kind of going off the recent trend action, so that's why you would pass on that shit. So. Anyway, doing the girlfriend thing definitely helps. Seeing why it was bad. The last one was a counter trend trade in SIG. So Signet's a jewelry company, real company, and a long-term downtrend. I think just had earnings or something, and caught volume on this gap down day, and it was a second day play here. But we've had 1, 2, 3, 4, 5 closes outside of Keltner. Last day kind of closing up off its lows. So if you got this would technically be the entry for the red dog reversal on this day, or for a swing basis, I guess. But having that daily chart set up, you maybe could have been thinking counter trends a day. Is there a real entry? I don't know. But it was there's the red dog reversal on this day happening. So you could have risked what was the previous low? 47.50. So you're entering 47.52. And your stop is 46.09, so basically $1.50, and then you get out today with $4, and maybe you hold it for another pop back to the midline. I don't know. Swing trade is not my shit right now, but just anyway, to land the plane on everything. W had the best, so A+ trade, right? Overlap. All this shit, bringing out to the all-time high. Intraday uptrend. We're getting outside the past 3 days range, above the opening range. No resistance above. Just kind of all that stuff, and that's what made W the best trade for the day. And as long as I follow my rules, they're gonna keep me only in good stuff. So this video ran a little bit longer than normal, but thought there was some stuff worth talking about. All right, man.